A big part of preparing to purchase a home is having a good credit score. There's a few levels of credit scores. Above 720 is really good. Between 620 and 720 is also good, and you would still qualify for all the loan types, maybe with just as good of a rate. Between 580 and 620, you can qualify for a veterans loan or for an FHA loan. So anyone can do that. Above 580, still get a loan, but the rates or the pricing may not be just as good. Below 579, you probably need some improvement on the score before looking to buy a home, but some ways that you can do that, whether you need the improvement or you're looking for constant improvement throughout, is always making your payments on time. Even a good credit score above 700 can get docked 150 points for one missed payment. And that doesn't mean if you're 1 day late because you forgot to pay your credit card 1 month that you're going to lose that month that much. But if you get 30 days behind, that's when the missed payment shows up on your credit report and you would be docked for a missed payment. It is good to have revolving credit. I know some people out there are very against having credit cards, but showing that you have some revolving credit every month shows that you can manage credit already, which is what the credit companies like to see to improve your score. And when you do have that credit card, it's good to keep it between like 10 and 30% monthly usage that you're paying off every month. What that means is if you have a $1,000 credit limit for your credit card, then be putting on about $100 or $300 and then paying it off every month. So maybe your groceries or your gas bill, well, half of your gas bill right now for the month. And if you have a higher amount on there or you're maxing it out, it looks like you can't handle what you do have, so they don't aren't as likely to raise your score. I'm trusting you with more. And what you don't want to do is close accounts. If you close the revolving accounts, then it looks like you don't want that credit anymore, and running away from credit does not build the confidence that they want to see in you. Having too many inquiries on your credit can also hurt your score. So if you have to do multiple inquiries, do it in a short time, like in a week or 2 weeks time span. It's more likely to show up as like one time frame of inquiry rather than doing it last month and this month and next month as well. That looks like you're desperate for credit and trying consistently to get more, and inconsistency or gaining credit wherever you can does not help your credit score. And lastly, anytime you do open a new account, it will dip your credit score for a few months. So before buying a home, don't open any new lines of credit, whether that be for a car or even a credit card if you don't need it, or a boat, or even leasing furniture or an engagement ring. If you're going to put one of those on a payment, try and do it a few months before you're looking to buy.